Welcome to Dreamers to Leaders, Keeping It Real with Melody podcast. Melody is a born dreamer who started from being a flight attendant and worked her way up into now a tech fashion trendsetter, thought leader, and seasoned entrepreneur in multiple successful ventures. This podcast is for the awakened dreamer. Industry icons will share their humble beginnings up to the leaders they are today. Let's all learn and be inspired. Together, we can all prosper.
Hello and welcome to the Dreamers to Leaders podcast. It's a podcast for the dreamers and, more importantly, the doers. I'm your host, Melody. If you're one of those who want to learn more about commercial lending, or you're a business owner who wish to know more about borrowing funds or refinancing your existing loan in today's market, this episode is for you. Joining us here today is Talin Simon. She is the Vice President and Business Development Officer for Pacific Enterprise Bank, and she has over 20 years in banking experience. Also with us today is Danial. He is the Senior Vice President for US Metrobank, and he personally has successfully funded over 600 million commercial loan. A little disclaimer here, their opinion as well as mine are intended for general information purposes only, and it's not intended for specific product advice or recommendation. If you know of anyone who would benefit from this program, please engage by commenting, sharing. It'll mean a lot to me as the creator, as well as my team who work hard in putting this show together. With that said, let's begin. Hi, Talin. Hi, Daniel. Thank you so much for joining me here today.
Thank you for having us.
Thanks for having us.
Wonderful. So let's begin. All right. So let's start with the absolute. What do you think consumers need to know, especially in today's market with regards to commercial lending? Let's start with you, Talin.
So right now, I think it's definitely a kind of a really questionable time in the overall lending industry and what the businesses are experiencing. I think, there's still definitely opportunities out there for businesses and for banks to lend to them. While a lot has happened, I think I can speak for most banks, not just my bank. It's definitely an interesting time to continue investing, continue buying real estate for your businesses, especially through different programs that are offered, even through the CARES Act, the SBA loans and the different types of loans that are available to borrowers. So there's a lot out there and a lot of opportunities for both the banks and the consumers.
How about you, Daniel? What's your take on that in terms of?
I think Talin took the words out of my mouth. I mean, that's basically what it is. I think that the banks are lending, but they're a little more cautious than they were before pre-pandemic, if you will. But government's done a pretty good job of providing guidance and aids to make lending a little more, less risky, if you will. And that's really through the CARES Act via SBA. So in my opinion, at least at my bank, I think we're with the government guaranteed loans, banks feel a little more comfortable, right, lending. But as she had mentioned, money's available. Yeah, banks are lending, but they're a little more cautious than previously before. Yeah.
So contrary to what a lot of people would think, especially with what's going on with the pandemic, it's not really like a screeching halt, even with what's going on with.
So I'm not sure for the rest of the bigger banks out there, but I know for the smaller banks, I know that back in March and April of last year, it was almost as if it came to a screeching halt, right? But then as we kind of gone through the process, banks started opening up a little bit more, right? So you come like maybe June, July, August, we started picking up a little bit of steam, and then they came out with the whole CARES Act, and then just recently, actually, yeah, as of yesterday, there's additional stimulus, I guess, package, if you will, that caters to the SBA loans, right, where customers that borrow can actually get up to 6 months of free payment, capped off at $9,000, and typically the government will guarantee 75% of the loan that we make, right, as a lender. However, with this new CARES Act package in place, they increase that to 90%. So basically, in the simplest terms, if you lend out $1, the SBA is going to guarantee 90 cents of that, right? Mm-hmm. So that makes it a little bit easier for banks to lend, than if you were to do this like on a conventional basis, right? And they've also they also went ahead and decided to waive the SBA fee, which is typically about 3%. So they're really encouraging banks and lenders to put more money up on the streets. Yeah.
So with all that activity going on, with more people having confidence in filling out that application,
right.
What does the lender, on the lender's side, what are they looking at in terms of approval process?
We look at business plan, what they have, projected for the next year or two, right? Because we understand that 2020 was more of a one-off type of an event, right? Because nobody really, no one really saw foreseeing a virus, just, affect our global economy, if you will, right? So
I think we want to look at like 2020 didn't happen, right?
Yeah, so it's almost like the way the banks look at that is almost like a non-recurring event year, right? Where that just kind of just happened and probably won't happen again, and that's kind of the
skip 2020, right?
Yeah, exactly right. So that's how we would look at things. So we have to look at a sound business plan going forward, 2021 and on, and beyond. And we also obviously look at the individual's outside net worth, right? That comes into play as well. Yeah. So those are some of the things that we look at.
How about with you?
If I can add to that, one of the things I think it's so important that, we all, to Daniel's point, we all understand that 2020 was not the best year, right? For most businesses. Now, some have done extremely well.
Right.
Some industries and some businesses have been able to take advantage of this and turn it around and make it really a positive thing. But for the most part, this is something that wasn't an ideal situation, but how these businesses kind of shifted their outlook and shifted their business plan and what they've been doing for all these years. They were able to move things around and kind of go with the flow and adjust their business model in order to make things better. Restaurants have done that with takeouts and catering contracts and things like that. So that's really important. There's always a story, and I think your bank and my bank, and maybe not some of the really bigger banks,
right,
but a majority of the banks out there, I think, want to understand the story behind, how the borrower really got out of this mess and how they turned it around and what the story is. And with projections, like Daniel said, it is something that banks are willing to lend on. So lending has not stopped, on the contrary of what some people might think, because of what's going on in the environment.
So do you see that weighing on what's in the business plan there's more focus now in looking at that versus before the pandemic, or kind of the same?
Right. So we kind of look at pre-pandemic, right? Like,
right.
How was the business in 19 and 18, right? And then what did they do in 2020 to kind of, survive? And then we kind of tie that into what's in store for 2021 for that business, So we kind of tie all that in together, and we practice prudent lending based on those, and that's really what we do. Yeah.
So with all the incentive programs that's being rolled out, what are the different types of plans and programs that are available out there for the consumers, and what makes one program different than the other?
Well, there's a lot of different programs out there. Um, this is kind of more geared towards the smaller banks, including my bank. Really, there's really two types of loans that we provide at this moment, which is the SBA loan, which is government guaranteed loans, and then you have the conventional, which is not secured by, is not guaranteed by the government. So the conventional loans are a little more, I guess we look at a little closer because we don't have any type of a guarantee, right? But we're a little more eager to lend SBA loans versus conventional because we know with the SBA, we have a guarantee from the government, right? But the SBA only applies towards business related type of requests. So it can't be like an investment property. You kind of get an SBA loan on investment property. It's going to be for something that you're going to actually own or occupy. Yeah.
How about you?
So there are some rules to that.
What are the programs and that you guys see more of, and what makes one program different than the other?
So kind of, we're kind of on the same line as far as lending the different type of programs that are available. We definitely love SBA because of the guarantee. And I think that's probably across the board, right? We, especially during times like this, we want to make sure that the bank takes the lowest amount of risk, regardless of how much we believe in our borrowers and their ability to pay back, right? They're able to service the debt, but should something unknown, something out of their control happen again, we want to make sure that the SBA can cover that, and the guarantee, the bank really feels secure with the guarantee. I think, for us, there's also, the state program. There's a state guarantee program, which is probably not as popular as the SBA is, or not as well known, but that's also available for the smaller dollar amounts. There's the conventional, and we're also still looking at conventional for the stronger borrowers, for the borrowers that, globally, overall, their numbers are not severely impacted by this during this time. And in general, going back historically as well, they've been able to maintain a pretty good cash flow globally. There's always lending options for different borrowers, and there's always the best fit for that particular borrower. So sometimes when I hear, there's only one thing that's being presented to a borrower, I always feel like we need to give them options as well, regardless of how we feel about, the particular program that we're trying to sell at the time. I think it's really important that we find the right fit and the right loan program, whether it's SBA or conventional or state guarantee program, that's the best fit for that particular borrower.
In terms of trends, is there anything that you've seen in terms of application that come your way that are getting more success in approval, and those that are being turned down more to the degree? So what are considered hits or success in terms of more success in terms of approval? And what are those that are kind of where lenders are not lending to the degree? Any type of risks like that you could say, mostly it's going to be a yes, and this type of risk, mostly no?
Okay. So I guess maybe just for speaking for my bank, the nose, let's start with the nose, would be a sit-down restaurant, right? That's the big thing. Hospitality, hotels, we'll look at it on a case-by-case basis. Right. I mean, any type of,
you think?
Yeah, anything that deals with travel, right, is probably going to be tough, right? Now on the yeses, drive-through restaurant, like fast food, those are great, right? Car washes are okay, gas stations are okay, distributors, manufacturers. We'll look at contractors as well. But I know from experience, from at least through my bank, the sit-down restaurants, I believe, are the ones that are impacted the most. Yeah, through this pandemic, which is
And I would imagine maybe salons and spas and those types of
that
non-essential, right?
right. So basically, non-essentials, right? Just had a client today that inquired about an SBA loan, and they have a banquet hall, right?
Mm.
Which they're not getting any banquets. However, they've kind of started doing catering.
Mm.
So they're able to make up some of the lost revenue through catering. So there's different ways a business owner will adapt to situations like what we're going through now. So we will consider those type of I guess on a case by case, but traditionally, at least through my bank, anything that deals with like a sit down restaurant or like as you've mentioned, like nail salons or those are a little bit tougher to get done.
Mm.
Yeah,
I think with like example that you said about the banquet hall, as
yeah,
long as maybe the business owners can prove in their business plan that they have done something innovative, right?
exactly. That's the key. Yes.
Yeah, and that would kind of show the bank that they have something solid in place moving forward, right?
Right, right. And believe it or not, we're going to actually do this deal. Yeah, because we felt that the way he kind of was innovative, like you've mentioned, right? Decided to do catering service, and we looked at his overall net worth, and he does have some outside net worth, in forms of cash, stocks and liquidable assets. We look at that.
The
We really
overall
look into
picture.
exactly right, and especially with the 90% guarantee from the SBA, right?
Mm.
So really, we're at risk for 10% of our money. That's what it comes down to. And also, we've got 6 months of free payment. So, having said that, I think we're going to move forward with this deal. Yeah. So there's an example.
How about you, Talin? Anything in terms of trends that you've seen in your bank?
So as far as industry, my bank, we pretty much look at any type of deal that comes our way. We're very, very open to different types of industries. I guess what I would say the challenges right now is understanding how the business, like the restaurant, like the sit down restaurant Dan was talking about. And I think that's definitely a good one to talk about. How are they going to get out of this, this difficult time and the reduced income that they've been experiencing for a year now, right? And now, even now that they're back in business, they're not at their fullest capacity, operating at full capacity. So that's something to consider. So we definitely want to see how they kind of shifted their business plans and the future ideas that they have in order to adapt to this new market where the fast food and to go service and drive through is kind of the way to go, right? But we just funded a deal that was for a fast food sandwich shop. So it's up north, and we're still open to it. It's a sit-down restaurant, but it's more of a fast food than the actual diner kind of a model. So we are looking at them. We're not limiting ourselves to any type of industry or business type, but I would also agree with Daniel. Hospitality has been hit so hard that it's really even with the vaccines, even with things improving, COVID numbers, looking better, it's still going to be a challenge to get that. There's going to be a ramp up period, right? So it's going to take some time for them to be where they used to be. Even the best hospitality hotel operators can't just turn on and off the switch and get the people back in there and get back to fully operational that fast. So that's going to take time to happen, and we're very conservative when we're looking at those with the right loan to value and the right rate and the right type of a structure with the SBA program. We're open to it. but it is definitely a difficult one to get through these days, I would say. Hospitality, restaurants, so we're kind of on the same page on that.
Yeah, it is refreshing to listen to you both, knowing that that it's not just a checklist. You know, here's the credit score, here's the loan to value. It seems like there's more. It's seen on a case to case.
It is absolutely case by case.
It's and I think that's good for consumers to know that, oh, I belong in this hospitality or in this type of deli, therefore it's just gonna be a no. It's not like that, you know. As long as the other pictures and the other moving parts are healthy and robust, then that still could work to their benefit and still get the funding that they need, right?
Absolutely.
Yeah.
Now, in terms of you know, with most of employees now working from home, how is the closing time? I mean, how soon can an application get funded? Typically.
So I think that, you know, that has not, it's a good thing that has not been impacted. So, you know, in a negative way. I think for my bank, I'll speak, what we've done is we figured out a way to be very efficient with individuals. Very few number of individuals are working out of the office, and it's not on a full-time basis. So they go in, they process something as they need to during funding. When there's an actual packet, you know, it needs to go to escrow. So we figured out a way to kind of navigate this situation, and the right people are working on the right deals. I would say timing wise, you know, everyone can expect just, you know, standard timing. Of course, right now with so much volume coming in, right? There's gonna be delays. So I don't care how good a bank is, there's gonna be delays. There's just keeping up with the volume. There was PPP, and now with this, you know, new SBA opportunity, so many people are interested in applying. Just that alone takes up time. 45 days is a pretty standard timing, I would say. 45 to 60 days, where maybe before 30 days was still possible. Right now, I would say probably 45 to 60 days is a realistic time frame. If we have a borrower who's involved, and all individuals are very involved when a needs list is issued and when pending items need to be collected.
How about you, Daniel? 45 to 60 days?
You know, I think she said it right there. It's if and only if the borrower is engaged and involved. From my experience, at least for my deals, you're looking at more like 3 months to 3.5 months. And only because, you know, business owners are having to run their business and they don't really have anybody else that they designated to that can provide us with all the items that are needed. And some of these deals are more complex, right? They're not, you know, cookie cutter type of deals. Some deals might be where a borrower might have 10 different corporations.
How important is a good credit score? And is there like a magic score, magic number that you guys are looking at, where if it is north or south of, then you kind of have your stand on? Daniel.
Okay. This is, and I can't really speak for the other banks, right? But some of the big banks I've worked for, they do have a score of, you know, a 680 or above, right? At my bank, we did have a 660 score benchmark, but we've kind of gotten rid of that. You know, we really look at the actual credit itself and figure out, you know, what's the story here, right? So we don't really have a FICO score matrix, if you will. We more or less look into the actual credit history of the borrower. So that's what we look at, yeah, in terms of credit score.
How about you, Talin?
Yeah, same here. So we need to know the story behind it. You know, if your credit score is, you know, 580 instead of 680 and above, you know, what happened there? Can you take us back and tell us how it's not going to happen, how we can take a risk on you and lend to you, and how you're going to repay, right? So there's, you know, derogatory things that need to be explained. We need to understand it. But we're okay with 680 and less credit scores. previous bankruptcies, things like that, as long as it can be explained and the reasoning behind it. So it is very much a case by case basis.
I really like hearing that. What's the story behind the score, and it's not just a black and white cookie cutter type
Right.
of approach. So that's actually pretty beautiful.
There's always a story. You just have to be open to hearing it and figure out how to and what to make of it.
Right.
So for when a loan is closing, what is the usual and customary expenses that one need to expect on a typical loan expense?
Daniel, you want to go first?
I mean, it's going to be the same thing, basically, I imagine, for both of us, but you've got appraisal, environmental, which is like the phase 1, phase 2, title, escrow. Those are pretty much the
processing, right?
Yeah, processing fee, right? I mean that's basically what you're going to be looking at, no matter what bank you go to.
For consumers to know that there's going to be buffer fees, that there are fees that they have to expect and be prepared for.
Right.
So then it'll close accordingly.
Right.
In many cases, also those fees can be financed, not all
Right.
fees, but a lot of those fees can be rolled into the loan amount. So the borrower is not really paying out of pocket or feeling the pain of coming up with, thousands of dollars last minute.
Excellent point, Talin. So to wrap it up, with all the lending that's going on, and with all the printing of money and the stimulus, $1 trillion stimulus package that's being rolled out, with the PPP, with the forgiveness and all that you guys also have mentioned. There are talks that probably the U.S. currency may not be the global dominant currency. Do you see that happening?
I would say that, yeah, I mean, definitely things are changing. I think definitely the environment that we kind of we're experiencing now, so much has changed. The fact that there is no more, you don't have to use money. You can use PayPal. You can use so many different services that are not actually, you're not touching money, right? So things are changing. Things are definitely a lot of web-based type of financing is available now. Bitcoin and all of that, who knows? I mean, maybe truly that will be our future. And hopefully not to the extent that it will affect all of our jobs in the lending industry, but I think it's to be determined. There's definitely a lot of changes that are coming our way, both in the financial industry, in our economy. I think to be determined, really.
How about you, Daniel? Quickly, what your take on the overprinting or the excessive?
I think we take inflation into consideration when we're doing our underwriting process, right? So we do foresee inflation, and we calculate that into what we're looking at. But as far as the economy goes, I think we're going to be fine.
You mentioned it prior to us recording.
Uh-huh.
If there's people buying, selling. The businesses are still thriving, then those are.
You're absolutely correct. Those are indicators. Yeah, the economy. Look at the housing market. Last year and this year is probably one of the hottest. Hottest it's ever been in a while.
So as far as that's concerned, I feel like as far as for the banks, we really definitely have to look at the risks associated with it in case there is an inflation, and in case it doesn't stop at that, and the economy gets impacted further, right? So the banks have to be very mindful and follow a more conservative type of lending. However, I think that for borrowers and businesses out there, as long as they're doing the right things and they're trying to buy for the right reasons, as long as they're trying to expand their business. There's always opportunities out there, and they can't go wrong with that. Inflation or not, if a business is looking out for their growth and doing everything they can, investing in the right real estate for their own use and not necessarily as an investment property. I think there's a lot of opportunities out there, and it can't necessarily impact them negatively.
Mhm. I agree. So, all valid, really insightful thoughts that you guys have presented here today. So, that wraps up our episode for today. Thank you again, Talin. Thank you,
Thanks for having me.
Danielle. Really appreciate your time and wishing you
Thank
both
you.
continued success.
Thank you so much. Thanks for having me.
And for all the dreamers out there, keep believing. You got this. Till next time.